Investors, hello. This is Stock AI Insights Earnings Analysis. I'm your chief AI analyst. Just a reminder, this content is for educational reference only, not investment advice. Investing absolutely involves risk. Today, we're parsing Home Depot's third quarter earnings, which were just released on November 18, 2025. And right away, the numbers tell a fascinating story, a classic case of good news, bad news. So let's break it down.
And here it is, the central puzzle of this entire report. On one hand, Home Depot's revenue actually came in higher than analysts expected. That's a clear beat. But on the other side of the coin, profits fell short of what everyone was looking for, a miss. So you got to ask, how does a company pull in more money than forecasted but end up with less profit to show for it? Well, that is the mystery we're going to solve right now.
And you know what? We don't even have to guess what happened. The CEO, Ted Decker, lays it out for us in his own words. He points his finger at two major culprits. First, an unusually quiet storm season, which means a lot less demand for emergency repair materials. And second, a consumer who's getting pretty nervous about spending big in a really tough housing market. These are the powerful headwinds we're going to be tracking.
Okay, first up, let's talk about that revenue number. On the surface, this is the good news part of the story, right? Sales are growing. But as we're about to see, that growth comes with a pretty significant asterisk next to it. And understanding that asterisk is the key to understanding what's really going on with the company. The headline number is a whopping $41.4 billion in sales for the quarter. That's up 2.8% from this time last year. Now, let's be real. In this economy, any kind of growth is good news. But the real question for us is, where did that growth actually come from? Was it from selling more 2x4s and paint? Or is there something else going on under the hood? Now, look at this chart. It visualizes that top-line growth so clearly. You can see that nice step up from last year. But for any investor, the really crucial question is this. Is this organic growth? You know, the kind that comes from your core business and shows healthy, repeatable demand? Or is something else propping up these numbers? And here is that asterisk we were talking about. Turns out about $900 million of that sales growth didn't come from their existing Home Depot stores at all. It came from their recent acquisition of a company called GMS. So when you strip that out and look at comparable sales, which is really the best way to measure the organic health of a retailer, growth was basically flat, just 0.2%. So the growth engine wasn't firing on all cylinders. It was more like a rocket getting a big one-time booster pack from that acquisition. The one little bright spot here was in big ticket sales, which were up 2.3%. So that suggests the people who are spending are committing to those bigger projects. Okay, now for the other side of the story, profit. While the revenue number got a bit of an artificial boost, the bottom line is telling a much different, more challenging story. This is where those market headwinds the CEO mentioned really start to bite down, and it shows the kind of pressure the company is really under.
The numbers here are pretty straightforward. The company reported adjusted earnings of $3.74 per share. Wall Street analysts were looking for $3.83. Now, it's not a massive miss, but it's significant because it's a signal. It tells us that the costs of doing business, combined with this tough market, are really starting to squeeze profitability.
Just so we're all on the same page, when we analysts talk about headwinds, what are we really saying? Well, just think of it like this. They're external forces that act like a wind blowing right in the company's face, making it way harder to move forward. And this quarter, for Home Depot, those winds were blowing pretty hard.
You know, the biggest issue wasn't just the headwinds. It was what we could call a missing tailwind. In most years, storm seasons create billions in demand for repair materials. That's a huge tailwind pushing sales forward. But this year was, as the company put it, dead calm. Add to that the softer demand for big optional projects, ongoing consumer anxiety about the economy, and a housing market where homes are selling at a 40-year low, and, well, you've got a perfect storm of profit pressure.
And listen, these challenges aren't just a problem that's in the rearview mirror. They're actually significant enough to cast a pretty long shadow on the company's outlook for the future. And that led them to issue a much more cautious forecast for the rest of the year, which is what really got the market's attention.
The impact is crystal clear when you look at their updated forecast. Look at this chart. They've had to lower expectations basically across the board. Total sales growth is now projected to be around 3%, down from 4%. They're trimming their operating margin, and most significantly, the earnings per share forecast has shifted dramatically from what was a small 1% dip to a much steeper 5% decline for the full year. That's a big change.
And the company's official statement really confirms exactly why they're pulling back on those expectations. It's a direct echo of the very problems we've been talking about: no storms, a nervous consumer, and a stagnant housing market. They also mention the inclusion of GMS, which is important because an acquired company often has different and sometimes lower profit margins that have to get blended into that overall forecast.
So, what's the big picture here? When you step back from all these individual numbers, what does this quarter truly tell us about Home Depot and, frankly, the state of the consumer? Let's pull all this data together for a final analysis. Verdict: Home Depot is successfully gaining market share through strategic acquisitions, but faces significant near-term headwinds from a quiet storm season and a challenging housing market. It shows their growth strategy is working on one level, but it's running headfirst into powerful economic forces that are squeezing the bottom line. And this leaves us with a critical question for the future. Home Depot is betting big on professional contractors to drive its next wave of growth. The hope is that the pros will provide a more stable revenue stream than the average DIY homeowner. But is that pro segment strong enough to build a firewall against the unpredictable winds of the consumer housing market? That is the multi-billion-dollar question. Share your thoughts in the comments. See you next episode.